Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 4th, 2025, and we're diving into Hologic's latest earnings report for the fourth quarter of fiscal 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Hologic, a leader in medical technology focused on women's health, has just released their Q4 2025 earnings. There's a lot to unpack, especially with their recent acquisition announcement.
Revenue and profitability overview. Let's start with the top line. Hologic reported a revenue of $1,049.5 million for the fourth quarter, marking a 6.2% increase. John, how does this reflect on their overall performance?
Hologic's revenue growth is quite robust, especially considering the challenging market conditions. The 6.2% increase is driven by strong sales in their core diagnostics and surgical segments. Their adjusted EPS of $1.13, which is up 11.9%, also indicates effective cost management and operational efficiencies.
And how does this compare to the analysts' expectations?
Analysts were forecasting an EPS of $1.10, so Hologic has exceeded expectations with their adjusted EPS of $1.13. This is a positive sign for investors, showing that the company is performing well above market predictions.
Segment performance and strategic initiatives. John, can you break down the performance of Hologic's key segments?
Absolutely. The diagnostic segment brought in $454.1 million, a 2.4% increase driven by higher U.S. molecular diagnostics sales. Breast health revenue was $393.7 million, up 4.8%, thanks to strong interventional product sales. The surgical segment saw a significant 10.2% growth, largely due to increased sales of MyoSure and Fluent products.
What about their cash flow and strategic moves?
Hologic generated $355 million in cash flow from operations, which is quite healthy. Strategically, they received FDA clearance for new assays, which should bolster future growth. Additionally, their acquisition by Blackstone and TPG is a major development, potentially valuing the company at $79 per share.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. How has Hologic managed its margins this quarter?
Hologic's GAAP gross margin slightly decreased to 55.6%, primarily due to expenses related to closing a manufacturing facility. However, their non-GAAP operating margin improved to 31.2%, reflecting better leverage on operating expenses from revenue growth.
And what does the future hold for Hologic, especially with the acquisition on the horizon?
The acquisition by Blackstone and TPG is a significant move, potentially enhancing Hologic's strategic capabilities and market reach. While they aren't providing guidance for fiscal 2026 due to the acquisition, the company's strong financial position and strategic initiatives suggest a positive outlook.
Key takeaways. In summary, Hologic has delivered a strong performance in Q4 2025, with revenue and earnings exceeding expectations. Their strategic initiatives and acquisition agreement position them well for future growth. John, any final thoughts?
Hologic's ability to beat EPS forecasts and maintain strong cash flow is commendable. The acquisition by Blackstone and TPG could unlock further value, making Hologic a company to watch closely.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Hologic's performance in the comments below.